Today our topic is about assets. We have to study what is meant by asset and what are the kinds and types of assets. So first we go toward the asset. Asset means the resources of business. Resources through which business generate revenue is called assets. So if we want to identify what are the assets, we can identify through three different characteristics. First one is ownership. Always the ownership of assets is in the hand of business, means they are in the possession of business. If any kind of goods which in the possession of business, we can say that is the ownership of business and that is asset. Second one, economic value. What is meant by economic value? Economic value means these assets can be sold against a price, against a money. If any time of business want to sell these assets, business can sell them against a price. So they have an economic value, interchangeable value. Third one, resources. These are basically resources which are used in the operation of business to earn money, to earn profit. So these are the three different features through which we can identify that these are our assets. Now we move toward different kinds of assets. What are the kinds of assets we will study here? First one is current assets. What is meant by current assets? Current asset means assets which can be converted into cash quickly, anytime period. In any time, if business need a money, business can convert these assets into cash quickly. What are those current assets? Let me discuss its examples. Like inventory. Inventory can be converted into cash. Account receivable, sundry debtors, these can be converted into cash. Similarly, prepaid expenses. Expenses which we have paid in advance, we can convert them in cash. Market securities. And some other types which are in the form of cash, like cash itself, bank balance. All these are current assets. Now we move towards second, that is liquid asset, or we say quick assets. What are liquid or quick assets and what is the difference between current assets and liquid assets? These liquid assets can be converted into cash more quickly than current assets. More quickly than current assets. They are either in the form of cash or they can be converted into cash more quickly. Like in this category, we have already studied that inventory, account receivable, prepaid expenses, market securities, cash, bank are all these current assets. But market securities can be converted more quickly. Similarly, cash is already in the form of money. Bank balance, these are liquid assets. These are either in the form of cash or they can be converted quickly. So we call these assets as a liquid assets that are converted into cash more quickly. Now we move toward another kind, that is fixed assets. What is meant by fixed assets? Those assets which are used long term in the business. They are not used in the business for days, weeks, months. They are used in the business for years to years. Mostly these assets are used in the operation of business. As we know, the example of these fixed assets are land, building, equipment. These all are fixed assets. Fixed assets can be categorized further into two types. What are those two types? One of them is intangible assets. Intangible assets mean those assets which have no physical existence. No physical existence. What are these which have no physical existence? Like goodwill. This is intangible assets. Patents, copyrights, franchise. Similarly, intellectual property, trademarks, all these are intangible assets. These intangible assets have no physical existence. These have no physical existence. Next, that is tangible assets. Tangible assets which have physical existence. Now, these have physical existence, like building, we can see it. Land, we can see it. Furniture, we can see it. Car, motor truck, and other many types of assets are called tangible assets. After studying tangible assets, now we move toward another category that is called fictitious assets. What are fictitious assets? Assets which have no value. Which have no value. They are fake. We call these fictitious assets. Basically, these are the losses and expenditure of business. These are losses, expenditure of business. They are written off with the passage of time. Written off with the passage of time out of profit. So what are the examples of fictitious assets? Like discount on shares, discount on issue of shares, discount on issue of debentures, like preliminary expenses, expenses at the start of business. All these are called fictitious assets. Now we look at another category, that is wasting assets. So we study what are wasting assets and what are the examples of those wasting assets. That is 7th. Assets which have limited life. Assets which have limited life are called wasting assets. Their value declines with the use. As we use these resources, their value will decline. At one day, they will deplete it all. They will be finished at all. Like, now we see the examples: natural gas, timber, coal, oil, and other natural resources are the examples of wasting assets. Now we move toward another category of another category of assets, that is floating assets. Very important. What are floating assets? Assets which are purchased for resale. Assets which are purchased for resale. As we know, if someone have a business of showroom, he purchases motor vehicles and then sold them. So those assets are called floating assets. They are not used in the operation of business. Similarly, assets which are used in the manufacturing process to convert it into another finished product. Which are converted into finished goods, like raw material. We purchase raw material to make finished goods. So this is called a floating asset. Now we move toward another category, that is operating assets. Some writer consider operating assets and fixed assets same, because these assets are used in the operation of business. All fixed assets, all tangible assets, intangible assets are our operating expenses. We need furniture to run our business. We need building to run our business. We need land. We need machinery. So all these are operating assets. And next, that is non-operating assets. Non-operating assets have also other names: growth assets, financial assets. We call them financial assets, growth assets, or non-operating assets. These assets are not used in business, are not used directly in our own business. We invest In other businesses like market securities, to generate a revenue other than our own business, like we purchase market securities, we purchase the shares of another company, we make a fixed deposits. So this fixed deposits is not used in the business. Market securities are not used in the operation of business, so these are called non-operating assets. So last category, that is contingent assets. We will see what are the contingent assets. Potential assets which arises on the happening of some future event. If any future event happens, these assets may be created. They are called contingent assets. For example, what are these contingent assets? Like lawsuit against a competitor for patents, for patents rights. So this asset may be created in future if company wins a lawsuit. This will be called a contingent asset. So we have studied all the types of assets in this lecture.